Hi everyone, Adrian Player here, Integral Loan Solutions. In this video, we're going to be going through fixed home loans, everything about current fixed rates and when to fix and why to fix. Okay, let's jump straight into it, guys. So fixed home loans, when should we be fixing? Now, I'm going through this with a lot of my clients at the moment, and really we have to always match the fixed loan to the purpose or your life stage. Okay, so what does that mean? Let's say you're mid 30s, you've just had a child, you're trying for your second one, and the interest rate is quite low on your mortgage, but you know that your costs are going to go up for a bit and your expenses because you're trying for your second child, then that's a great time to fix your loan because any increase in rate is going to hurt you a little bit harder now compared to in the past. So then if you're at that life stage, then having a dependable payment that doesn't change is an advantage for you. Okay, so that would be one example. Another example would be an older person, age 50 or above, towards the end of their career, wanting to take out a 3, 4, or 5 year fixed home because really they've gone past their top earning potential. Okay, and they're coming closer to retirement, so they much more value a fixed home loan with a repayment that doesn't change as opposed to a variable rate that can go up or down at any one time. Okay, so that's another one. Then we need to look into when you should be fixing. Okay, you should be fixing when there is a big gap in the rates. Now, why do I say that? So I'll give you an example. The 2 year fixed rates at the moment on owner occupied principal and interest are anywhere between 1.89% and say 2% at the moment. Now, those same rates with the mid-tier banks as well as the big banks on the variable side of things is around 2.45 to 2.6% at the moment for new customers. Now, that gap's big. It's 0.6 or maybe up to a 0.7% interest rate gap. Now, that essentially means that the RBA needs to drop the rates minimum 3 lots of 25 basis points to get you down, get your variable rates down to where the fixed rates are at the moment. But a lot of people saw during COVID-19 that a lot of the rate drops that occurred, the banks weren't passing on the variable rate decreases. Now, so that's why a lot of people are taking the 2 and 3 year fixes at the moment because they see a much better deal and a much better overall rate. Okay, so then let's go through what is the main checklist that I go through with my customers. Okay, so one, are you selling the property inside the fixed period? So I'll give you an example. If you're taking a 3 year fix and you map out your life and you know that you're going to be staying in your property for 3 years at a minimum, then fixing would be suitable for you. If you think that you're going to sell inside of 12 to 18 months and upgrade your home, then maybe fixing isn't for you. Okay, any large bonus or a big promotion on the horizon? See, why would you fix the majority of your home loan if you know in the future that you're going to have much larger amounts of cash to make extra repayments on the mortgage? So your knee-jerk reaction might be to increase the variable portion before you fix. So then any extra cash that you've got, you can put into the mortgage on the variable portion instead of fixing the majority of the loan. Now, the third one, any big inheritance coming in. Okay, it's sad to think about these things, but if you've got an elderly parent that's not doing too well, and you think an inheritance might be incoming, then you may not want to fix your loan because if you do, and say you have 500,000 incoming in inheritance, then if you lump sum pay that onto the loan, you're going to have break costs, and we all know that the reason why I have this checklist is we want to avoid break costs. Okay, you want to avoid break costs at all costs. I've seen 4 and 5 year fixes have break costs of $20,000, $30,000, $40,000. Okay, you've seen 2 and 3 year fixes. You could have a couple of thousand to $3,000 or $4,000 in break costs. Okay, so we always want to avoid break costs. All right, how does a bank figure out what the break cost is? Well, they figure out what your loan size is. They figure out what the funding cost was at the start when you fixed your loan, what the funding cost is at the time that you break it, what the difference in the rates are, difference in the funding cost, and then they on forward it to you. Okay, so that's why we want to avoid break costs all the time. Okay, we always want to make sure we factor these things in. So, one, where are you at in life? Okay, so that is a very good determining factor on how long you want to fix for. So, most of the time, younger people under age, say 40 to 45, most of the time look at the 2 and 3 year fixes. Okay, the 4 and 5 year fixes normally are better suited to the older, more stable kind of client that's over age 50 to 55. Okay, that's we do not have a crystal ball and every client is different, but this is just speaking in general. So if you do fix, you always need to make sure that you're adding up the amount of savings that you've currently got, plus how much of a dent do you think you can put into the mortgage every year on top of your normal repayment. So I'll give you an example. If you think that, let's say you've got 50,000 in cash, and then you think that you could put an extra 10 grand on top of the normal repayment per year, then I would say the minimum variable balance that you have is $70,000 at a bare minimum. That allows you to put your cash in, put it in the offset account, and enable you to put the rest over the 2 year period that you're fixing. All right, so we're always making sure that we're mapping this out. We're figuring out what your life stage is. We're figuring out what your goals are over the next couple of years. And then we're making sure that the fix that you're taking out is suitable for you, but also that you're getting a very good rate compared to the variable rates for fixing the loan. All right, so this is just a short video to get that good information out there. I don't think enough brokers and lenders are talking about this openly, so this is why I've created this video. If you need any help, please find my contact details in this post, send me a message, leave me a comment, more than happy to help. Just trying to get as much good information out there as possible. Adrian Player here, Integral Loan Solutions. You have a good rest of your day. All right, bye.